All right. We back once again. Good Money Podcast. Guytho the Great, Guy.
It's your guy, Palmieri, Good Money Pal with the Good Money Podcast. Greetings, everybody. Hope we're finding you in good, good health and good wealth and things of that sort.
Yes.
What's going on, Guy?
I'm chilling, man. It's been another good week. These good weeks been piling on, so feeling blessed. That's the new saying, man. Catch the lessons and secure the blessings. You know what I mean? So
I love
that's
it.
what. Yeah.
Run
That's
that
what
back.
we
Run that back. Catch the lessons.
catch the lessons and secure the blessings.
I love it.
Yes, sir. Yes, sir. So, we just been taking it day by day. Got a couple more closings lined up. Real estate starting to pick up a little bit on my side over here. So got a few properties we're going to list. My partner, Tanya, she's out there grinding it out. So she always bringing new business to the table. So, we just doing what it do. Make sure to dig out my Good Money cap for today. You know what I mean?
That's it, man. I don't have one of those either. Listen, I'm missing a lot of stuff, man.
We working
I just
on
want to
it,
go
man.
on record as saying that I'm missing a lot of the Good Money apparel that I should have here
Mm-hmm.
in
You heard
person.
that, Ernst? You heard that?
Dude, you holding that stuff hostage, man.
Yeah, and he got boxes over there. He got to hit the post office and start sending things out.
No doubt.
Yeah.
No doubt. So yeah, man. So you guys are active on the real estate space, right? And these are investment properties that you're working with?
Both. I think,
Okay.
investment properties are always coming, and, a lot of residential. So a lot of people just downsizing or upsizing or, first time home buyers. I still get a lot of those as well. So
Okay.
yeah. And then we have our investors. We have a team of investors that are constantly buying stuff like that. Then we got our guys that's out there looking for the flips, the fix and flips, rehabs and all of that, which is pretty much a lot of the clients I get is a lot of fix and flips and rehabs out here.
Yeah, man. That business has been growing very well for me, as my role as a direct lender, right?
Yes,
Working
yes.
exclusively with real estate investors. A lot of what we do is helping them, with fast, reliable funding. Because as you know, when it comes to investment deals, you've got to be able to move quickly,
Yes,
especially when
definitely.
you're dealing with a motivated seller, where they're just looking to get the transaction over with quickly. And, just kind of touching on that as we come into, third, fourth quarter of the year, I was reading a report on home flipping profit margins, right? And
Okay.
so would you believe me if I told you that this report is saying that home flipping profit margins have come down actually in the second quarter? Yeah. And this is covered over 78,000 homes across the country, right? Now I imagine, that was covered from April through June. So
Hmm.
I imagine that it's probably region specific, but here in New York, on the East Coast where we are, fix and flip profits are actually pretty strong, you know. So I recently funded a transaction for an investor. He purchased a property in the Bronx, and he picked it up for 500 and I want to say 545,000, right? And I
Okay.
gave him a budget of about 150 to repair the property. Before he laid any, before he did any work whatsoever, the after repair value appraisal came in at 910,000. you know,
Wow.
and
Yeah.
that's huge, man. That's his first deal. So I want to say that some of the investors that I work with, they're definitely seeing some huge profit margins here on the East Coast as far as fix and flip is concerned.
Yeah. I think that's an area where our lines of business differ because I'm more on the mortgage broker type side of it, and it's not really too much. I still got a lot to learn, but I don't think there's too much we could do as far as the fix and flip side of it. You know what I mean? Whereas private money, that's really where you get to stick your hands in and find creative ways to make it work. With us, we do have FHA, reconstruction loans and stuff like that. But like you said, when you're in the market and you need to flip and you need to get on these properties right away, you don't have time to check with different contractors and this and that. You need that money to come in rapidly and the transaction to go smoothly. So for you with the private money, it works easier that way.
Absolutely, it does, man. And I got to tell you, deals don't wait, and neither
Hmm.
should you, right? And so, as far as your funding is concerned, who you work with as far as a private lending institution, it's critical because
Yes.
if you can't get the deal to the finish line by way of closing, right? If you don't have the right financial partner, deals can fall apart, funds are at risk. Some of your clients, my clients, they put down sizable earnest money deposits, and they want to put down those deposits, that down payment, to purchase that investment property. They want to put that down knowing that they have a private lender that is going to be able to deliver, right?
Hmm.
It's critically important. So I'm pleased to say that, I'm able to get deals to the finish line. I'm able to do it in a timely fashion. And more importantly, I like to say that I'm at the forefront of new developments in the private lending space, right? So, one
Hmm.
thing I wanted to share with you is that we do have some breaking news. You ready?
Yes. Yes.
So, a lot of our investors have asked for, more cash, higher leverage. And I'm pleased to tell you firsthand that we can now go up to 80% loan to value and a cash out refinance, right? So we're adding
Hmm.
additional leverage for well qualified borrowers to be able to pull more cash out so they can continue expanding their real estate portfolio, right? So just to give you an idea of what that looks like, right? Higher leverage, more cash. Let's say you have a property that's worth $1 million, right? And you're looking to pull cash out of it. Typically, you would have been capped at a 75% loan to value, no matter how high your credit score is. But with this new addition to the loan program, as far as cash out refinance is concerned,
Hmm.
on that same $1 million property, instead of being capped at 750,000, we can now get you up to an $800,000 loan amount. So you're
Okay.
talking about in that scenario an additional $50,000 net back in that investor's pocket. It's huge.
Yes, definitely, definitely. So when you're saying the 80% loan to value, so that's going through the DSCR program, you're saying?
That's correct. Yeah, that's correct. Yeah, so that's going to be a debt service coverage ratio loan program, and the
Hmm.
qualifications for that is we just need the income from the property to cover dollar for dollar what the mortgage payment is going to be. So, using that same example, you know, mortgage payment is 4,000 a month. We're looking to see that the property is generating at least $4,000 a month in income or greater.
Okay. So I know on our side of it, and I know it's more paperwork and a lot more that comes with it because I know with the refinance, especially with FHA or VA loans, we could probably do 80 to 90% LTV. But again, that comes with a lot of stipulations, a lot of paperwork. So you're basically saying doing it through the DSCR, it speeds, fast tracks the whole process, and they don't have to go through the credit and all of that and that type of things that they have to send in with the regular loan.
So we are still a credit based lender as
Hmm.
far as those programs are concerned. DSCR is concerned. We are still credit based, but the difference between us and a traditional lender per se is we're not looking at tax returns, U2s, pay stubs. I'm not looking at any of that stuff, right? In terms of qualifying you for a DSCR loan. All I'm really looking for is what your credit score is to determine what credit box you fit into, and then how much of a loan request are you looking for relative to the property's actual value. The conventional mortgages, right? Mostly for the conventional mortgages, I feel like it's like death by a thousand paper cuts, right? They're asking for W-2s,
Yes.
they're asking for tax returns, they're asking for pay stubs, they're asking for your firstborn's right arm. They're asking for a lot. When it comes to business purpose loans for investors, right? DSCR loans or loans for fix and flip or commercial loans as far as real estate is concerned. For us, we're not paperwork intensive. What we're looking for is we're looking for, let's see, we're looking for good credit.
Hmm.
We're looking for the property to appraise. And our loans are going to be based on the credit box that you fit in and the property's actual value relative to the loan request that you're requesting. So no W-2s, no pay stubs, no tax returns. As long as you've got decent credit and a property that actually has some good value on it, we can issue loan terms.
And then what are the terms as far as how long are the terms? Like you do regular 30 years
Yeah, if
or
it's a DSCR loan, we can go 30 years. We can even go up to 40 years. But yeah, we go 30 years with a 5-year prepayment penalty, and that's on a step down basis, right? So that prepayment penalty diminishes over time.
That definitely sounds like something to look into. I know a lot of people, they get tired of the paperwork and everything that comes with going through it the traditional way. So that definitely is something. Another question that a lot of people might have is how does it work with the interest rates?
So as far as interest rates are concerned, interest rates on DSCR loans are driven by the 10-year treasury, and they're
Yes.
typically slightly more expensive or higher as far as the rate is concerned than your typical qualified mortgage.
Got you. So where do you think it lands on a? I know everything is based on credit and everything like that, but you have like a
I'm
range,
seeing, yeah,
how much of a
I'm seeing
difference?
right now, and we're talking about today's date, right? September 24th, 2025. We did recently get a rate cut. So I'm seeing rates in the low to mid sixes right now for DSCR loan.
Got you. Okay, that sounds good. I was looking over a lot of the stuff that came with the DSCR loans, and one thing that stuck out to me that really caught my eye was the DSCR as a second lien
As
position.
a closed, we call it closed end second mortgage. So yes, we do have access to that loan program. And so what that does is it keeps your first mortgage intact. So that's for borrowers who, they've had the property for some time, maybe 5 to 7 years. They were able to secure, a nice low rate, probably in the threes or the fours. And they need access to cash, but they don't want to disturb that first rate. The closed end second mortgage program is perfect for them. It's a perfect fit. And on that, we can go up to 80% on a combined loan to value basis.
Okay, so for somebody that does not know, how does that currently work? So it's not, so now you basically have two loans you have to pay off. Am I correct?
Yes. So what it is you're keeping your first loan intact because again, you've got a first mortgage. I'll give you a real case example that I'm working with now. Right. A borrower owns an investment property in Brooklyn. Property's worth $1.3 million. It's a 3 unit. The borrower's first mortgage is a little less than 250,000, and they've got about a 3% interest rate on that first mortgage. In that scenario, the borrower is looking for an additional 300 to 350,000 in additional cash. So we offered him a second mortgage, $350,000 loan amount, and that goes behind the first mortgage. And so as long as the principal and interest, taxes and insurance, plus the principal and interest on the second mortgage, as long as all of that is covered by the cash flow that the property generates, he'll qualify for the loan.
So that's the main part of the DSCR is that the amount of money that comes in needs to coverage the
Yeah,
PITI.
because if we're saying that this is an investment property,
Mm-hmm.
the borrower has a property, it's worth $1.3 million. It's a three-family in
Mm-hmm.
Brooklyn. His first mortgage is 242,000. His interest rate is below 4%. Naturally, he's not going to want to disturb that rate. I wouldn't if I was him either.
Yes, of course.
But he is looking for additional cash from the property to continue pursuing expanding his real estate portfolio. So we extended a second mortgage to him of $350,000 and that loan amount. And the way we qualified him for that loan is that the principal, the PITI, which is the principal interest, taxes and insurance, plus the principal and interest on the
Mm-hmm.
second mortgage, those two numbers combined, as long as the cash flow from the investment property is sufficient enough to cover those two payments, he'll qualify for the loan.
Uh-huh. Got you. And I'm pretty much playing the role of a consumer, just certain questions that I might know the answer to, but I want to put out there. So if my home is not a investment property. It's my primary residence. Am I disqualified from this or?
Well, I would answer it this way. As a direct lender working exclusively with real estate investors, our loans are business purpose and we close in the name of an LLC.
Mm-hmm.
Okay.
Yes,
And
exactly.
so when you're talking about that type of a scenario that you live in that house, you're probably going to have to pursue a qualified mortgage or a qualified secondary mortgage. Yeah.
Secondary
Yeah.
mortgage,
You're,
yes.
you're probably not going to be able to tack on an investment loan, right? Or a DSCR
Loan.
loan behind the property that is functioning as your primary residence. Yeah. If you decided to move out, if you decided to move out and now you can, you have evidence that you've moved somewhere else and now you're going to operate your former primary residence as an investment property, right? With some paperwork, you're going to
Mm-hmm.
have to retitle the property in the name of your LLC.
Of course.
But with some paperwork, yes, we can get you qualified for a second mortgage in that scenario.
So the property should be an LLC when pursuing
Yeah, I would
this
say
route.
so. Yes. Yeah.
Yeah, I know that's a lot of things that come up. You know, a lot of people hear the information or get these news flashes on the internet, on Instagram, and they don't have the full knowledge, and they try to work it in different aspects that certain times it doesn't fall into that box. And you know, another thing is you have a lot of people that have multi units where they're living in one unit and renting out the others. So as far as that goes, that probably falls on the same aspect as it not being in an LLC one and it not being a business,
Right,
correct?
right. Because what's happening is you're talking about that demographic that house hacks, so to say, right? They got maybe a 3-family or a 4-family. They
Mm-hmm.
decide to live in one of the units and they decide to rent out the remaining units for cash flow. I applaud that, right? But for the sake of a
Mm-hmm.
true investment property, loan, it is still technically owner occupied. So it would not qualify in that
Gotcha.
scenario. Again, if that person was willing to turn the property into a fully functioning investment property, then yes, we could qualify that. We can qualify them for that loan program.
Yeah. So the main thing that people have to take into consideration, the whole DSCR program, regardless of whether going to a private money like you or more of an institutional based kind of like what I do with the mortgage broker, is this is for investors.
Yeah. And let me tell you, man, I think we need to. I think we need to drive it home for people to understand the power of business purpose loans or the power of loans for investment properties. Right?
Mm,
You can qualify to purchase a property, add value to it, and then if you want to start building a real estate investment portfolio, the real only viable way to do this is with a DSCR loan. Because even if you did it with conventional financing, the challenge you're going to run into is you can't scale, right?
can't scale. After a while,
Yeah,
you
you're
get
going to get
capped out.
capped out, right? So you can't scale. And then on top of that, if you do decide to use conventional financing rather than a DSCR loan, what's going to wind up happening is now all these properties are showing up on your personal credit profile, right? And so yeah,
That's
it
one.
shows up on your personal credit profile, and more than likely, it's in your personal name, which opens the door for liability issues as well, right? So when I deal with real estate investors, I'm always going to recommend that they use DSCR loans because you can scale infinitely, right? As far as owning investment properties, they'll never show up on your personal credit, and you can keep the properties in the name of an LLC and cover and protect yourself as far as liability is concerned.
Okay, that's something that I wasn't too clear on or aware about, is as far as it coming up on your personal credit. So even if with most times, even if there's a mortgage out, even under a business name, I guess it's depending on how the business is structured. Am I correct? Or would it not come up on your credit at all as long as it's under an LLC?
So what happens with us is we pull credit because again, we don't look at pay stubs, U2s,
Tax
tax
return,
returns, job history. We're not looking at any of that
any of that.
as a
Mm-hmm.
compensating factor to confirm that you have the ability to pay back the loan and pay your bills on time. So the credit profile
Hmm.
is our main compensating factor that we use to see how you handle debt, right? Because the idea is that if you're paying your primary mortgage on time, the probability of you paying your investment property mortgage on time is going to be high. But if you have lates on your primary mortgage, how can we count on you as a private lending institution to pay your investment property loans on time, right? And so we want to see on the credit profile, we want to see that you're a good steward of your finances. We want to see that you're handling your debt obligations appropriately. And once we see that, we're happy to extend credit to you.
Gotcha. No, definitely the whole program I think is a great program. I've done numerous deals. DSCR, I had one guy that, he had a house. He pulled out his equity from his house, and I was like, yo, your next step now is you pulled out 150. Let's break that down. You could just quickly get into two DSCR programs and, expand from that. So I definitely think it's a great tool. You know, I I'm not as versed when it comes to private money as you are with it, as far as when it comes to the DSCR. But again, regardless of which way you go, it just makes sense as an investor to take advantage of this program.
It makes total sense. I was just with a very prominent real estate investor over the weekend, and he's actually a mentor. He's a real estate mentor. He works with people from all walks of life, and he helps them to, he helps them as far as their process is concerned, how to manage and excel at the business of real estate. And so, just to give you an idea, one of his mentees, after taking his mentorship class, purchased a property in the Bronx. He paid $345,000 for the property. Okay. He added some value to it out of his own pocket, less than 100,000, and the appraisal came back at $710,000. So now he comes to me
Nice.
for a DSCR loan. Okay. And that's where I step in and say, hey, listen, property's worth 710. How much cash are you looking for? He felt comfortable with a $500,000 loan. So after a brief period of underwriting, right? Again, no tax returns, no W-2s, no pay stubs, none of that. Just a credit check, confirmation of the value, and lease agreements, right? We were able to give him a $500,000 loan, and that's a DSCR loan. And this is the same gentleman
Mhm.
that we closed a refinance. We're in the process of doing a refinance for him on another property that he's just about to finish, but we just closed with him on a fix and flip loan, for that acquisition at 545,000, renovation of 150 and ARV of about 910,000, So,
I like
oh
those
man,
numbers. I like those numbers.
I'm happy for the guy, man, because, I'm thrilled for the guy because, literally in less than 6 months, he's generated, I'd say, $400 to $450,000 of cash proceeds in his pocket as a brand new real estate investor using fix and flip loans and DSCR loans. And I don't know too many avenues that you can do that in.
Hmm. Hmm.
So
Got
I
it.
think
Got it.
DSCR loans are definitely a powerful tool. Investors should definitely take advantage of them. And if anybody wants any information or more details or wants to discuss a scenario, they can always feel free to tap in with me.
Definitely, definitely. So, about a history of DSCR loans, is this a new program? Is this something that's been out for a while and just nobody was really paying attention to, and it just became prevalent now, or it's just all new programs and new things that were put out to stimulate the economy and everything going
I
on?
wouldn't say it was necessarily put out to stimulate the economy. I would say that, like any good solution, it was born out of necessity, right? Because again, on the qualified mortgage side, you're capped out at a certain number of loans on a qualified mortgage basis, and you can't get any more loans. So now, if you've been a
Hmm.
successful real estate investor and you've now been capped out on the qualified mortgage side, how do you continue to scale? And so I imagine that that same question probably was posed to several successful investors, and the DSCR loan was born, right? And the whole premise of a
Hmm.
DSCR loan is that the property has sufficient cash flow to support itself with respect to its debt obligations. So, simple math. If the property is generating $1,000 a month in cash flow, it can support $1,000 mortgage. Now, the investor is probably going to want to have some net cash after they pay their mortgage obligations. But for all intents and purposes, that property generating $1,000 a month in cash flow can support $1,000 mortgage. And it doesn't have to
Got you.
it doesn't have to rely on the support of the person, the natural person, right? The actual human being who owns that investment property. It doesn't have to rely on that person's personal income. It can rely on the income from from the property itself,
Cash flow.
from the cash flow.
So with the private money, I know it has to be investment property, but do single family work as well? As long as it's...
Absolutely. And that's how these institutions, you see them in the Southern Belt. They're over there, acquiring single families in size, right? It's a constant complaint that I'm seeing as far as home affordability is concerned. You're competing with institutional investors who are working with lenders like myself who can move very quickly. So this was built for single family. This was really built for 1 to 4 units is what it was really built for.
1 to 4 units, yeah. I recently posted something that I saw that was interesting, and I know you have mentioned it a few times before, especially to me privately. It was with the institutions buying up so much of the properties. So it was something relating to institutions using private money and buying up a lot of property and then basically selling it to themselves under another company for a higher price. And by doing that, raising the appraisal value for the area and just pricing out a lot of people just by doing that. So now they're raising the appraisal rate and it allows them to sell things for even more money. And it's like something that's going on a lot especially the high value areas, especially where you are and, California and all the places where, prices are already up there and it's just driving the prices higher and higher.
I would say that I've heard reports of this. I can't say that I've come across it personally in my own dealings, but what I will say to you is that when the institutions purchase a property, they're owning the property for cash flow purposes as a store of value, as a store of wealth, right? They use these single family homes and 1 to 4 units to really park capital because they know that the rental income. Rents are constantly increasing, right? What is the annual rent increase? 5%? Somewhere in that neighborhood. So institutional investors can count on that. And as long as they can service the debt, they're okay with that, right? But as far as what you're talking about, that sounds like bad boy behavior. I would imagine. I would imagine.
Yeah, that's something that definitely needs to be fact checked and all of that. But, it was a post that I saw and I found it very interesting. You know what I mean? So something to think about.
Yeah, I would say to you, man, I work with institutional investors, but if you had to ask me who my favorite, like my preferred investor profile, my preferred investor profile is the brand new investor who has a career, has entertained the idea of investing in real estate. They've seen other people have success at it and they want to get started, right? Because I know the power of investing in real estate. And so, as I said, just speaking on the most recent examples of people that I've worked with, this individual was a private individual, well-educated, had some financial resources, never invested in real estate before, and look, 2 deals in, $400,000 in net proceeds in their pocket on 2 deals, right? And so I love working with and helping to develop stories like that. Right? Because what that does is it motivates other people who may have been on the sidelines looking to get started in investing in real estate and they didn't know where to begin or they didn't know how to get started. You can get that kind of help and support from me as a private lending professional.
That's the good money way, right? It's the good money way. Definitely. Yeah, that was big news. Seeing a lot of the stuff come in with the DSCR, the changes and everything like that. Guess the interest rate drop was also really big out there. It affected a lot of things. You see more coming with the interest rates, or
I see that I'm forecasting an uptick in DSCR volume, and the reason for that is it's real simple. If you've got tenants and they're paying you X amount of dollars as far as rent is concerned, and you've got a mortgage that you have to cover every month, but you can reduce your cost of capital because rates have come down, why wouldn't you take advantage of that, right? So because at the end of the day, you're going to have more net cash in your pocket. And that's the whole idea, right? We're doing this to make money. So I think with the breaking news that I had shared, again, I'll go over that one more time. So breaking news, we're now offering more cash, higher leverage, right? And we also have a lower FICO score requirement. So for DSCR loans, we were typically capped at a 660 as far as FICO is concerned. On the lower end, we can go as low as a 640 FICO, and we can go up to $1 million cash out at 65 loan to value, 65% loan to value on that loan program. So
Nice.
some real exciting developments in the private lending space, and people need to take advantage because at the end of the day, right? We all need to make some more money. So I would say let's get out there. Let's find some real estate deals. They're definitely out there.
They are. I come across them
Yes,
every day, you know. They're out there. And like you said, there's a rush of new investors, new people that are either listening to podcasts like this or other podcasts or seeing different people do these things and they're looking to get into it. And this is a great opportunity for them. And, you know, I think it's a great opportunity for anybody that's looking to be an investor, even seasoned investors too. I think this is something that if you don't have under your belt, it's definitely a great tool to have, the new DSCR program. I wouldn't say the new program, just the DSCR program and all.
absolutely. Absolutely. Just kind of going back to some research that I've done, the research is showing that, profits for home flippers has been steadily falling for more than a decade, right? That's what they're saying. But the typical home that's
Mm-hmm.
flipped right now is netting somewhere in the neighborhood of $65 to $70,000 in net profits, right? So,
Yeah,
fine,
I think the same here
yeah.
too.
So, I mean, a couple of deals like that, and before you know it, you're able to build your own real estate portfolio.
Hmm. Yes, definitely.
Yeah, brother.
So I'm going to touch on a few other things outside of the real estate that's been going on out
Gold is
there.
at an all-time high.
Gold is at an all-time high. Where is it at right now?
3,800 an ounce, fresh off of our last episode. That's
100
it.
up, right? That's like almost 200 up from the last time we spoke
That's
about
it,
gold.
man. In the name of in the words of the good brother Trinidad James, all gold, everything.
All gold, everything. Hey, man, I foresee gold. And again, they were talking about it last year. And me, myself, as well as other people, I was in and out, you know, getting little. I should have put all in and reaped its benefits, but now is another time. So anybody that's watching everything go on with gold, hearing all the news, there's a lot of chatter about it. So
Listen, man, I'll tell you this.
it's
I had spoke with Mr. Menjivar about using gold as a treasury reserve asset for real estate investors. I think we need to circle back with him and have a conversation on that because he had some really, really good insights on that.
okay. Explain
So,
that for
in
me.
terms of using gold, people could literally take the cash flow from their investment properties above and beyond the cash needed to pay off their mortgage or pay the mortgage payment.
Mm-hmm.
And instead of just having it sit in the bank, they could park that in actual gold, whether it be physical or a gold ETF or a gold IRA. I wouldn't say an IRA because there's going to be friction to access the funds, but I would say some type of an
Yeah.
account that allows you to quickly access your liquidity, but the money is sitting in gold.
Yeah, that'll definitely be, you know,
Yeah, so like
yeah,
a
that sounds
treasury
great.
reserve mechanism for real estate investors. So we had discussions about that with other real estate investors. That was like a large, I would call that like a webinar that we did. Yeah.
Okay. Yeah. And I also see the news, a lot of things going on with Intel.
So as far as Intel is concerned, Intel just caught some support from the government by way of an insider purchase.
Yeah, yeah. That was a little I know they had the
It's the first of many. There's going to be
partnership, I
more.
would say.
There's
Yeah.
going to be
There
more.
was a partnership with the government, with Intel, a partnership they made with the government. And then now I see I don't know if I have the numbers right, but I know it's in the billions that there's looking to invest in Intel.
Yes. So Nvidia just made a major investment into OpenAI, which is something that we definitely have to cover. You and I, we should discuss that at length to just kind of see what the implications are going to look like for that.
That's definitely going to be something to look at.
Yeah, but we definitely got to tap in on that on the next episode. I'm thinking.
Okay, yeah. Definitely got to go into that.
All right, my brother. But I would say, let's dive into that on the next one for certain.
Do it. Let's do
I
it.
got a couple of topics that I definitely want to cover, that being one of them, because that's like real prevalent in the news right now.
All right. Well, we'll sign off for now. Everybody that's looking to invest in real estate, we just gave you a great option, a great way to go. The DSCR program, you could look into it, and my partner here, Paul, showed you the private money side of it and the advantages that come with that. So all my investors out there that's looking to, grow their portfolio, this is definitely the way to do it.
That's it. Always good money. This is the Good Money Podcast. I'm Good Money Pal. Signing off. Till next time.
Guytho the Great, and we'll talk to you soon. Good Money
Peace.
Podcast. We out.